All right, so we're going to be looking at a London close trade. I've outlined the hourly breaker, and it's a fair value gap. And I went short here, and this is through TradingView. It's not MT4. I can't game the system. Okay, and I'm going to be looking for expansion on the downside, reaching into that sell side liquidity pool. Stop loss is in an area where it's of no concern for me, so I'm not worrying about if I get stopped. I'm focusing primarily on, does the candles show continuous desire to expand on the downside? Okay, it's reaching a little bit lower. Now right in here, I'm studying that low. I don't want to see the bodies really expand too much on a closing basis above that level. Now we traded up into a fair value gap. So this is all reasonable. Okay, and I want to see price stay below that consequent encroachment it traded to inside that fair value gap. And I'm going to be looking to take partial profits below where it says sell side liquidity. And that'll be offset distribution. In other words, I'm short and I want to cover or buy back some, as I'm about to show you here. This shows you the account. It's all brand new and fresh. Took a partial right there, 85,000 from the original 125. That's 125,000, or what would be equivalent to $12.50 per pip. Okay, and I lowered the stop now because we're at the end of the London close kill zone. So if it comes back and stops me, I'm fine with that. If it continues, that's just as well. But this is an example of how you practice each day, even though you may not want to be a day trader or a scalper, using the ideas that I'm teaching you and how to annotate your charts and the things that I'm teaching you in terms of the PD arrays. As this goes on week after week, daily, you're going to see an enormous increase in your understanding. You're going to start seeing things in price that you didn't otherwise notice, and you're going to develop a routine, okay, a niche. You'll build a better appreciation for what it is you're trying to do, because it's based on time and price. So I entered short at the 10 a.m. response to the manufacturing PMI number for the US. So the trade was framed on that volatility, and then the liquidity run as a draw on liquidity at the sell side liquidity pool that's annotated here. And you'll see that it ultimately goes up and hits my stop. No harm, no foul. And I'm showing you the results of this price action lab. Now, you want to do like little laboratory experiments every single day if you can do it live. By doing this, it builds in consistency, continuity in your development, and it proves over time that you can find 20, 25, 30 pips relatively easy just about every single day. But you need the volatility, you need the injections from the economic calendar, and everything I'm showing you here. You can clearly see this is not all that big of a deal. It's a little less than 3% on one trade in one day, framed on the things that I teach you with the economic calendar. We talked about Monday's trading. At 10 a.m. there will be a medium impact news event for the US dollar, and that was again the manufacturing PMI number. I don't care to know what the number is. I don't even look at the data. I just know there's going to be a flurry of activity, and then I look for the liquidity pools, and if there's a framed low resistance liquidity run, I'll take it. Hope you enjoyed this one. All right, folks, welcome to February 2021. Brand new month, brand new liquidity, brand new opportunities. All right, so we're looking at the 5-minute chart of the dollar index. Now, I'm not going to do this every single day. I'm not going to sit down and record a trade and manage everything all day long because it's very, very time consuming, and I'm already doing 1,000 different things every single day. But I wanted to open up this portion of the real beginning of your mentorship. I stated that I wouldn't take a trade until the first trading day of February. That's typical. You know, it's just what I do every single year. And I'm going to show you how periodically, I'm not this part of the mentorship where I'm sharing trades, well, not sharing them, but showing you executions. I'm not trying to build in the dependency or the desire to see this all the time. All right. What I acted on today was exactly what I teach you in the mentorship. But this is what it looks like when you first start demoing. Okay, so it's a little bit of pantomime on my part. And what do I mean by that? You're not going to be going into trades and trying to hold them for hundreds of pips. Okay, the assumption in this example today was that you followed along with the logic that I was teaching you in the weekend commentary. So Sunday morning, when you watched the video from this past weekend, I gave you scenarios that, because I don't know what Sunday's opening is going to be, so I got to give you both sides of the marketplace only on the weekend commentary. The reason why is because no one knows that opening price on Sunday. So all weekend long, when the markets are closed, when Sunday's gap open happens, higher or lower, it gives me clues as to what the algorithm is going to do. If we open relatively unchanged, it just means that we're really not in a hurry to do much. All right. So if you look at this chart here, and remember, if you go back and listen to the recording I gave you on the weekend for dollar and euro dollar, I gave you very specific things I was looking for. Now, some of you came in, I'm certain, with just morbid curiosity. What's the difference between ICT on YouTube and ICT in mentorship? And can I really trade? And can I call the moves? And can you really learn this? And is it really predictable? Okay, if the algorithm is something that I understand, then I should be able to demonstrate it, and I should be able to teach you the things I'm using to forecast what I think the algorithm is going to do. Now, stop and pause the video, rewind a couple moments, and then listen to what I just said again, because it's rather profound. If you really absorb what I just said, it's not gambling. It's not gambling. You're not guessing. You're not rolling the dice. You're waiting for very specific things. Okay? I start the videos all the time, except for now these daily things. The midweek and weekend review, I give you a calendar. Okay? And many of the students in here look at that as it's filler. It's, whatever. Get through the boring parts, ICT. Show me where you think the market's going to go. The purpose of having the calendar brought up in the beginning is because that's when your attention span is at the highest. And it's also where you should be taking your notes and saying, okay, on each individual day, where's the high impact or medium impact news drivers that the central bank's algorithm will utilize the liquidity around, just before or during that event. Monday's calendar had a 10 a.m. New York local time manufacturing PMI number that was going to come out for US dollar. So how do you use that? Like, what are you really here to learn? What are you trying to learn? Well, I teach a lot of intraday because it gives you these opportunities to practice. And it's basically like a price action laboratory. Okay, so each day you either want to do it live in study, or you want to watch it in hindsight with the, I guess it's called the replay feature on TradingView. And you can Google the how to use it, but you'll see in my recordings, I don't use that. They're executed orders. You can see the candles expanding and contracting throughout the whole process. The replay feature for TradingView only shows you an ending candle. Every new candle is already fulfilled and closed. So it doesn't give you any kind of dynamic momentum, higher or lower. It just, this is it. This is the next candle. This was the result of it. Okay, so there's no funny business here. You can see my history. You can see my executions, the times, what the leverage was. You can see when the stop and limit orders are canceled because the trade is collapsed, because either a take profit will be hit or the stop loss will be hit. Now you just watched the video of me trading the London close kill zone today. London close is 10 a.m. to noon New York local time. So since that specific time of the day, 10 a.m., had a medium impact news driver, I was waiting for that setup. Now I could have traded overnight in London. I could have traded the New York session, but I elected to use just how I teach you here, looking for that one little sweet spot and taking execution on it. Now, again, this is not, listen to me, folks, listen. This is not to say you should be going in here, especially for the new folks that are in month one. You should not be practicing with your demo account yet. You have no reason to get in there yet with that. But you study price action. You study it and observe. You put annotations down after the moves occur. Period. Okay? You're not trying to pretend that you can do this right away. You are not going to be able to do it right away. And if you try to do it, it's going to be very discouraging to you, because you're thinking, because you watched the video, you watched me do it, so therefore you should be right away able to go and do it. And that's the mistake that every single group has had coming in here. I have a plethora of people that come in and have these unrealistic expectations on themselves, and then they try to do something too fast without any understanding what they're doing, and it creates this brick wall in their development, and they want to quit. All right, so what we're doing here is a gradual progress, and each day all I want you to do is observe, take notes in your study journal. Any questions that come up, you write that down, and simply just relax and let this do its thing. Okay, you're picking up pseudo experience by me doing these things for you. But if you try to make more of it or use it as an encouragement to go out there and start trading with my funds right now, you're going to fail. You're going to quit. You're going to never observe the things I need you to observe while you're in the early stages of development, and it stunts your growth. Okay, I don't want to talk like this each time we do this, but in the beginning, because there's a lot of you, I want you to hear me. I want you to succeed. I want you to be able to do what you see me doing. But you will not do it if you don't listen and do the things I tell you to do and not do the things I tell you not to do. Okay? All right, so here's the dollar index. I stated, this was one of the scenarios I gave you. And again, this is not a plan A, plan B, and I'm right always. Okay? Think about what I'm saying in those videos. This is the reason why I tell you to download them. Because once you download them, I am in a position where I cannot go into your computer, I cannot go into your flash drive and manipulate what I was saying. Okay, it sounds silly, I know, but that's what people outside the mentorship say all the time. Like, I'm not fixing it so it look good. I tell you what I think is going to happen. I gave you a preferred setup. I would have rather seen it trade with a gap lower on the open on Sunday for the dollar index. Trade up, fill it, and then go lower. That's what I wanted to see. It made sense for me based on what I saw in the price action on Friday at the close. But I stated that if we see a gap higher opening on Sunday, I expect it to trade down, fill the gap, and then trade up to those premium levels on the dollar's daily chart. Go back and listen. You'll hear me say those very things. Now, is that plan A, plan B? I'm always right if one goes out and does what I say. No, that is algorithmic. What I'm saying to you is, if profitable trade on Monday is the equivalent to a baked cake, okay, and a recipe for that baked cake is an algorithm, you need to have ingredients. What's the ingredients necessary for a winning trade, from my perspective, on Monday? Well, I have to utilize the things I gave you, or the ingredients that I look to use to make a high probability trade on Monday. It starts with the dollar index. It needs to give me information, and I gave you both. So either one I was going to engage with. So if we get a higher opening on Sunday, which is what we have here, it gapped. This is Friday's close here on the dollar. And then we open up here. See how it gapped up? There was no trading between this closing price and this right here, or the opening price on this candle. So that's a gap. That's what we refer to as an opening gap on Sunday. Now, the way it opens, when you have a idea what it may be reaching for, and what do I mean by that? I mean that if you look at that daily chart, and we'll look at the lines here, this is that premium level that we were looking for, and I was outlining as my objective should we have a gap opening higher. So whenever you see a gap opening on Sunday, you want to include that in your chart. Now that's what I'm showing you here. It gapped up and then traded down, filled in the gap, bounced, went a little bit deeper, one more time, and then sent it higher. Where was it drawing to? I told you in the video, it's going to go up to this red level up here because that's a premium. The market needs to draw up there. Now here's the wonderful thing. I don't care if it goes down from there. And neither should you. Because the framework was given to you on Sunday morning before the market even opened up. That recording was done multiple times during Saturday. So way before Sunday's opening, I gave you the very things that I explained that the algorithm would do. Now, it's not supply and demand. It's not Elliott wave. It's not retail logic. It's not support and resistance. It's none of that stuff. Except for the very things I told you to focus on in Sunday's video. I gave you two things to work with. And regardless of which one it did, I told you where I thought it would draw to as a result. Well, here we have the dollar index. Did it do what I outlined? Absolutely. Perfectly. Now, if we see the gap opening here on dollar and it trades down, fills that gap, we set up the idea that we're going to be bullish for dollar. Is it just any old time now it's going to go up? No. When does it create the higher low of the day? London Open. So think about what we've done here. We've outlined the algorithmic theory for if we get a gap opening on Sunday, that sets the stage for a bullish run to that premium level in the daily chart. Okay, so now we have a expectation. We see we did get a gap opening higher on dollar index on Sunday. We wait for it to drop down and fill the gap. What is it doing? It's moving to a short-term discount. You don't want to buy it just because it gapped up. You want to wait for it to trade down to a discount. And it takes out a very short-term low here. And it trades back down into an order block there. And we go a little bit lower here and accumulate more longs. And we go into this area here and it drops down one more time and accumulates more longs. So what is it working? It's doing multiple attempts to work this lower level on the gap, which was Friday's closing price. The open, high, low, and close. They're the only four things that you need to be worrying about. The indicators, moving averages, all that stuff, it's nonsense. If you understand what the algorithm's doing, and that's what I'm teaching you here, folks, but you have to slow your roll. Too many of you are in a hurry. You're already sending me 20, 30 different emails and questioning things about things I already told you how to find the information in the forum. Those 8 lessons that you got in month 1, that's not it. That's not mentorship. That's just the beginning of you learning my language. The lessons are in these commentaries. If I'm talking about a buy-side imbalance, sell-side inefficiency, or a sell-side imbalance, buy-side inefficiency, BISI, SIBI, respectively, you go into the forum and you type those words in, SIBI or BISI, and it'll take you to commentaries that introduce that. And it tells you the difference between a BISI and a fair value gap. The category is a fair value gap. The characteristic is imbalance. The specific PD array is BISI or SIBI. That's the hierarchy. But you have to use the search tab and you have to watch videos, folks. I'm not going to sit here and answer emails. Hey, I don't understand the difference between a Cibi and a BISI. Okay, we'll go into the forum, do searches on it, and watch the videos. I'm not going to be giving you the magic 8-ball response. Okay, you're not going to send me an email and say, save me the work of doing the research in the videos you've already supplied and did ample explanations with, and me take you right to an answer. Like, I'm not going to do that. There's too many of you, and some of you already are abusing it. I don't answer those types of emails. I'm going to come back with something that's going to seem very, very curt. Go and look in the videos I already got. Do a search in the forum, and you'll learn. It's all being delivered to you, folks, but you have to do the work. I mentioned this in the beginning. I said it in the details and enrollment. If you are lazy, and if you're getting offended right now, suck it up, because I already warned you that I'm not going to do these things for people that are lazy. You will take notes. You will take copious notes. You will watch very, very long videos. You will refer to multiple videos for the same idea or topic to be taught to you, because it has to have a layered teaching. It can't be just simply you buy here, sell here, and it works every single time. Because if that's how it worked, everybody's trading course and everybody's trading would be superior. And it doesn't happen. But you're seeing the real mechanics of what takes place. But you have to submit to the process. Because if you don't do this, I am going to frustrate you. You're going to be angry at me. And it's nobody's fault but your own. Because I warned you before you came in here. It takes work. It takes a lot of videos. And you're not going to understand it the first time you see me introduce it into a video. You're going to have to see me work with the information and draw parallels to that idea and concept to other things. That is mentorship. Not just this mentorship. That's mentorship, period. When you learn something, you're learning every facet, how everything ties together. Everybody thinks they understand order block theory, and they have no idea what they're doing. I'm getting also emails from people that are from the 2016 group. ICT, did you mess up and call a order block by a different name or a new name, or is it something that's interchangeably used? Okay, in other words, a propulsion candle is not the same thing as a projection block. Two different things. I just introduced it, and already people are freaking out. Take notes, folks. I'm going to come back to these concepts. They all work towards this grand tapestry that you're going to understand. But I have to walk you through it because it's a lot. It is a lot. And some of you are impatient. Oh, this is going too slow. Am I telling you what's going to happen before it happens? Yeah. Be content with that while you learn. Because I don't have to do this. I could just say, here's the learning lessons, and there it is. I could take the entire commentary portion out of where it's going to go next. I could take that part completely out and say, here's just the teachings. And that would get you there. But I'm doing above and beyond what you need. But you came in with these ideas thinking you need this or that, and you have no idea what you need. You have no idea. You're giving me your wants, and I'm not running Burger King mentorship. Okay, this isn't have it your way. It's my way. My way works, and for those that don't want to do it this way, that's on them. Because those that do the things I tell you to do, you'll get it. Okay, so do we concern ourselves with going short $1 because of the gap opening higher on Sunday? Not at the moment. Until when? We could revisit the idea when it trades up to this level here or higher. But right now, we are not worried about it. Because it gapped up higher on Sunday's opening, it sets the tone for a bullish run to a very specific area in price on the daily chart. So that means every time it declined in here, we did not lose our mind thinking it's topped. It's drawing to that premium level that I outlined and have talked about the last couple weeks. So if you don't fully understand what I'm showing you here, it's very clearly referred to in the midweek and weekend commentaries from January. Okay. So with that said, let's go into the Eurodollar. So here's the Eurodollar 5-minute chart. And again, some of you are freaking out. Oh man, this is a 5-minute chart. I'm scared of it. It's too noisy. No, it's not. It's perfect. It's beautiful. So right away, you should be pausing the video right now and doing your workup in your chart, and then try to contrast that with what I'm going to show you here. All right, if you're not ready, pause the video. All right, so here is what we saw leading up into overnight last night at midnight New York time. We had a high, declined, buy-side liquidity pool in here. Some of these annotations are not going to be here. I'm just filling it in audibly so that way you can do it in your own chart. Bearish order block with a fair value gap. Trades up into the bearish order block, which is optimal trade entry here for an Asian session setup. Then we consolidate going into New York. Now, this right here, if you look at your hourly chart, you'll see this is a little bit cleaner, and you'll see a very small little fair value gap that it trades up into, and above a little bit, but nonetheless, it's optimal trade entry there. And I'm annotating, and this is what you want to have every single time you do a log entry daily. You want to annotate the midnight opening price. So your candle at midnight, whatever that opening price is, when it starts trading on the midnight candle relative to New York time, extend that out in time. All right. Generally, I extend it all the way out to 11 o'clock in the morning. That's pretty much how I have my own personal charts. But I kept it very short here because I want the chart to be clean and easy to read, not be so distracting, because I'm having this annotation here. Okay. So we trade above a couple times here, and here above the midnight open candle. So now think about what I stated. On Sunday, if we get that gap higher opening on dollar, that's bullish for dollar. So flip that upside down when you're looking at euro, because it's going to be opposite. If dollar's bullish or going higher, that means euro is bearish and going lower. The ideal scenario, and this is the key, and this is the thing I unlocked that Larry Williams proposed as a puzzle. I took it as a puzzle to me. He didn't say Michael. He just said, I don't know how to do this in his videos in 1995. So I said, if he says he can't do it, I'm doing that. So I cracked it. When we're bullish dollar, bearish euro, I'm going to use that opening price at midnight. And I want to be selling short at that price or above it. Here's your optimal trade entry. There's what Larry Williams didn't know. There it is. There's your entry right there. And then you see that price run in London. What time of day is that forming? Around 3 o'clock in the morning. That's the sweet spot for London open kill zone. 2 o'clock in the morning to 5 a.m. New York time. Market drives down, consolidates, higher low, higher low. So now right away we have a low resistance liquidity run signature between this low and all this in here. And it retraces. What is it doing? It's retracing into the time at 10 o'clock in the morning Eastern Standard Time that the ISM manufacturing PMI number for the US, that data is going to be released at 10 a.m. So all of this retracement in here is a lead up to this news driver. And then we get an optimal trade entry here inside of a fair value gap. This is on a 15-minute time frame. You can watch that recording again at the beginning of this video where you see me trading. So this shaded area in here is that fair value gap. And it's optimal trade entry. So I went short. I purposely chose to enter opposed to entering right here as it ran right into that. That's where I would have entered if it was just me. But I'm trying not to show you perfection, because if I show you perfection, that in itself will give you such a unrealistic expectation. And even when you're doing well, you won't feel that you're doing well, because you're gonna be looking at my entries and you'll be like, oh man, I want to do what he's doing. And you can't do that. You're just starting. Okay. Even the charter members from 2016 group, you're not there. You're many years away. You're probably doing extremely well. I'm not trying to discount that, but I have to do a lot of management, because if I do what I'm capable of doing, it's going to feel like you're never going to get here. And some of you might say, well, I just want to watch you do it. I don't have the time to be doing all these recordings. I'm already doing way above what I already promised in the mentorship enrollment. And the folks that have been here for a while, they're getting all this for free. They already paid for it. But I want to make sure that nobody has a excuse why they're not learning. What is it I'm supposed to be doing, ICT? Well, I'm showing you. You set up your charts. Okay. Now, when you watch that recording, notice it did not have these little annotations here. I don't want that stuff on my chart. I only have on my chart what's salient at the moment, what I'm working with. Where's the liquidity? Down here. It's pulled up into a premium. Okay. I have a level here that has institutional order flow entry drill. I was watching that. It's not here in this chart, but it was there in the recording because I was watching as we got into that 10 o'clock hour. I was waiting for it. Does it have a willingness to drive up into this high? And I would have sold short above that, but it was just hanging around in here. So I was like, okay, we couldn't make an attempt to go outside of this. So I just went short while we were in it and towards the end of the low end of it. And I went short there and trusting the fact that then it's not likely to go up in here because the number, it was late on London close beginning and mid New York opening. So it's like an overlap of those two time of day. And it generally isn't a whole lot of excitement, especially since we had this nice run in London. So we've had a lot of animation in London. This retracement here, it's going to be, well, we're already at 10 o'clock starting it with this report. So how much movement can we really have in 1 hour between 10 o'clock and 11, about midpoint? I'm always looking for that also to be very sensitive for the turning point or the opposite end of the daily range, or all the way up into noon. But it can roll over, and I have some annotations in here. It can roll over and go lower than this, which is why I have the sell side liquidity pool noted there. And ultimately, think about what I've drawn your attention to on the Euro daily chart. That's where I'm observing price right now. So the lower level fair value gap on the daily chart on Euro, that's what I think the draw is. So around that 2040 level, thereabouts, maybe a little bit lower, I'm thinking it's going to probably go into that. And as I'm recording this, it's probably doing it. I don't know. So if you look at the framework here, I'm giving you time. That's the number one thing. Time. What time of day is this occurring? It's occurring during the London close. It starts exactly at 10. 10 o'clock is when the news driver comes out. Here's your pattern, optimal trade entry. So time is being met. The pattern, optimal trade entry, or it could have been just as easily trading the fair value gap, or it could have been just as easily trading the bearish order block here. You see right away you have multiple ways for you to use your individual model. You could look at these relative equal highs here and do the standard running of how many pips above, 10, 15, 20 pips. Does it line up with that inside of the fair value gap? That could have been your model. Or it could have been you're just trading off that 60-minute breaker. And that's what it does here. Here, that would have been your entry. Here, that would have been your entry. It's hitting the 60-minute breaker. That's what I start the video with at the beginning on that trade. Everything was hinged on that higher time frame hourly chart. Then when I get to the time part of it, that has to be there because it's time and price, not price and time. Time of day, kill zone, London close. Coupled with a news driver at 10 o'clock, medium impact for dollar. Bias is already predetermined based on Sunday's opening. We had that higher gap opening on the dollar. So that set the stage for what? Dollar running up to its daily premium level. Well, that means we're going to have a run on the euro dollar lower. And we don't need to see a gap lower on euro. Oh, how's that for logic? So everything in here sets the stage for a run lower. We have a mitigation block. If you did not take this trade, this could have been an entry rate in here. It also is the fair value gap on a 15-minute time frame. And that's why this doesn't look like a fair value gap because it has this. But this was framed on that 15-minute time frame. And it trades up into consequent encroachment and the mitigation block, which is the down close candle. In here on a 15-minute time frame, extended out in time. So we have two different things for a premium entry. Again, what's a premium? It's above equilibrium or above discount. All right, so if we look at the range between this low and this high, split that in the middle, you can see we're above midpoint with the mitigation and the consequent encroachment of the fair value gap. Consequent encroachment is the midpoint of a gap. Okay, so right there's perfect little entry in there. I think it probably went like 1 pip at above. I know I'm not perfect. And then sells off. We have another order block in here. That's this big beefy candle. Why not this one, ICT? It went higher because it has a little tiny little body. I want the big beefy bodied candle. And I cut through candles, so there again, we're not supply and demand. So we have order block with the bearish fair value gap, and that fair value gap is here to here. So it fills in that, and then it runs to what? The sell side liquidity, which is offset distribution. Offset distribution is where if you're short, you're going to be buying from willing sellers at a lower price. Why is there sell side liquidity down here? Because people are seeing this, and they're looking at harmonic patterns, they're looking at Fibonacci's, they're looking at supply and demand, whatever they're looking at, whatever retail logic they're using, and it starts to go up, they're chasing it, and they're going to put their stop loss right below here because that's what the books tell them. And if they're buying long, what kind of stop is it going to be? A sell stop, which is what makes this a sell side liquidity pool. It's pulling a bunch of liquidity that is predominantly selling in nature, because if the market participants that are riding this up are long, they want to protect their long position by selling out. They don't want to ride anything lower than this, so they're willing to sell at a lower price when it's up here. So the market efficiency paradigm that I teach you is I'm selling up here when they're trying to buy it, and I'm trying to buy it back when they want to get out of their long under here. And that's why it's offset distribution. I'm doing the worst possible thing to a retail trader in this instance. I'm their worst enemy. I'm their nightmare. And you're learning to be that too. And don't have any moral conflict about that, because they understood the risks when they opened up their account. Period. We all have this understanding. You're going to lose money too, and you'll be a victim eventually. But I'm teaching you to be the predator, not the prey. So when you look at this, it's working towards the low end of the daily range at the end of London close. Can it go lower? Yes. But you are not to try to do that in the beginning. So back to that outline of what it is I'm showing you. Over time, while you're learning how to do the things I'm teaching you, you're going to start practicing by observing price. And you're going to look for these types of things to occur in price. Not demo trade it. Not live trade it. You need to see it over and over and over again. Watch it happen. See it in hindsight, study it, which is what I'm teaching you to do here every single day. I'm giving you a perspective. I'm teaching you to see the footprints so that way you can track these opportunities. Just like a hunter teaches his son, this is how we track the deer, son. You look to the ground, you see this little marking here, that's a deer track. Find the next one. And then by exposure to that, he learns how to track a deer. Does he know how to shoot a deer at that point? No. What if he shot the deer? Does he know how to clean the deer and process it for meat? No. They're all lessons that you have to learn here. But you have to learn what the footprints look like. And that takes the boring experience of going through and doing this. But you learn to love this part, because this is what you're going to be doing the rest of your life. You got to do this the rest of your life as a trader. So doesn't it make sense to learn to love doing this part of it? Because if you can't do this part right, none of the other stuff is going to work for you. None of the lessons I'm going to teach you isn't going to make you money. Period. Until you learn this. I'm demonstrating it. I have proven to you before the market even opened up what should take place. What does the market need to do to fulfill the idea that the dollar is going to go higher or go lower, and the opposite will be seen in euro? And I told you what fair value gaps that I would draw my attention to based on either one of those ideas on that dollar index. And here we are right here. Now, I already hear some of you like, dude, really? It's a tiny little move. Right. And guess what? I can do this move here. I can do the move here. I can do the move here. I can do this move here to here. How many trades is that? Well over 120 pips. Think. You're looking at this, if you're cynical, saying from here to here, big deal. But guess what? This whole idea is the same thing on a 4-hour chart, same thing on a weekly chart, and it's the same thing on a monthly chart. It's the same thing on a quarterly chart, which is 3 months per candle. How many pips is that? So save your cynicism I understand it, but it's wasted effort, because what you're learning is how to read price. Don't look at that number 5 here and get tripped up thinking, man, I don't want to be a day trader. As cool as this might be, I don't want to be a day trader. Okay, great. Don't look at that as a number 5. Think of this as a daily chart or a 4-hour chart. And you don't even need to be in front of the chart live. You can do everything from limit orders and stop orders. You don't need to watch price as it goes, intraday. You don't need that. And I teach you how to do that. But you have to learn this stuff still. It's how you do it. And intraday gives me an opportunity, as you'll see, there's daily opportunities to do something, either in hindsight or when you get to the part where you can start demoing. When can I start demoing? Once you're a charter member. It's a lot of time, I know. Oh, I can't do that, ICT. Well, then you're not going to learn the right way. Period. A doctor does not get a scalpel the first day he signs up for the prerequisite lessons in science and math to be a doctor. They don't give him a scalpel. They tell him, bring lots of pencils, sharpened, and notes. Take them. You're going to be filling notepads up and study and study and study and study. And they're years away from touching a scalpel. Are they discouraged and not wanting to take that doctor salary home because they can't carve up on a cadaver yet? No. They submit to that process. And you are doing the same thing here, either kicking and screaming, or you're saying, you know what? I trust you, Michael. I've been waiting to see this, and now I see what you just said on Sunday. The things that you said are very specific, and the things that you're showing in this chart, you have been showing since I first started the mentorship. And it's still happening all the time. Now, it's not retail. It's not something I can point to. It's not Chris Lurie stuff. Okay? It's not Sam Seiden stuff. It's not Gann. It's not Wyckoff. It's not Richard Dennis. It's not Linda Raschke. It's not Larry Williams. It's just ICT. That's it. So we will be back at this again tomorrow, but it won't be nowhere near this long. Okay? I just want to make sure I reminded some of you the proper mindset and what you should be doing. And don't be discouraged if you don't have in your chart the things I'm showing. Over time, because you're seeing them, you're like, oh, does this fit in this chart now? When you're doing your work for tomorrow. And you'll start seeing, oh yeah, now I can see it. It's not that big of a deal. And you start loving it because it's like a game. Turn it into a game. And how close can I be to ICT's chart? It's all you got to do. Think like that. I gave you a trade today because I know some of you came in here thinking, oh, he's only talking about what's already happened. This sucks. He ain't as good as I thought he was. Well, I'm showing you everything that I'm teaching you in operation. And while it was only 20 pips or so, that same 20 pips, I can do that multiple times every day. And you'll be able to do that too over time. How long? I don't know. All of you are going to be different. When's it going to click for you? It depends on how much time and effort you put into it. And that's the truth. But I'm not making things up. I'm not using an MT4 server. I'm not doing any of those things. Okay? You're going to see me do trades where I'm taking 100 pips down. You're going to see me doing trades where I'm taking 200-300 pips down. You're going to see me doing things like that. And it won't be in an MT4 rented server. So welcome to the inner circle. Welcome to the real inside track to how these markets book and how price moves. Highly specific, highly precise, and you can scale this to be whatever you want it to be. If you want to just be looking for 20 pip trades every single day, you'll learn that. If you want to look for 150 pip per week, you'll learn that. You just want to make 100 pips over the course of a week, you can learn that too. You want to be a position trader and not have to sweat this stuff and worry about kill zones and all that business? Okay, but you have to still learn the idea about them because it'll help you dial in better entries. So that way you don't have the anxiety once you put the trade on because you're submitting to a longer duration of trade, which I'm not comfortable with. I'm comfortable with doing these things here because it makes sense for me to find a setup that starts at 10 o'clock and I know I'm going to be out by noon. So I'm submitting 2 hours out of this day that I'm going to do something. What am I doing? What I outlined on Sunday's video. Those filters were met. Those ingredients were mixed in the bowl. And then here you go. Now, some of you are thinking, well, you got stopped out. Well, I did what I would reasonably expect you to do. And once you get to the charter membership, and you'll start seeing some price action models, and you'll see some logic also with how to manage stop losses when you get into later lessons too. There's a specific criteria I give, and I don't follow it in the trade. Now, what am I saying? I'm saying that if we're looking for that daily fair value gap, and we'll say that's 2040. 2040 is the target, and for my entry and where I place my initial stop, there's a specific criteria that I teach you in managing your stop loss. If you do that, you will not likely get stopped out, and you'll be able to hold for the majority of the move. Now, there are times you still will get stopped out, but for the charter members, I just gave you homework. You can see in this video at the beginning, I'm not following the logic I taught you, but I did give you what generally happens when someone gets into demo trading or they're practicing. They hurry up and jam their stop loss down, and then it kicks them out, which it does on this swing here in my trade, which was a demo trade. It was, like I said in the enrollment, these are not going to be live fun trades because I am not legally allowed to do that. But I can talk all day long and on weekends about paper trading and demo trading, and there's no violation of law there. This here is where the trade stops out. I would not be surprised if it creates a run lower here and trades into that 120.50, but ultimately gets into that 120.40 into Asia, maybe even before midnight New York time Tuesday. So there's a lot of things in here to study, and there's a lot of things I did not include in here. For instance, you have this right here. This is a sell side imbalance, buy side inefficiency. It gets rebalanced in here. There's a small little fair value gap right in here. That's what's being respected here and here. And it falls. Now, I don't know what the chart's showing right now. It could be, technically, it could be screaming up right now. I wouldn't know. But if you can learn to be content with, okay, this is when I see a setup starting, and this is where the setup would close for a high probability intraday scalp. Okay, 20 pips. Thank you very much. You're saying that even if you don't want to be a day trader, you're not fascinated with that? Because that is something that people from Goldman Sachs will say is just noise, and no one in the world can teach it to you. If they try to tell you they can, run away from them. They're a con artist. I swear, they're a con artist. Well, you're learning it. I don't know what to do but to say, hey, look at me over here. I invited them too. I say, hey, look, you want to learn how to do this? I'll give you a clinic on it. I'll show you. They weren't interested. They blocked me. I wasn't able to see their stuff anymore. So anyway, I'm digressing. Long and short is, you're learning the real deal. You're learning the real thing. Okay. And hopefully this has been a very fun video, and hopefully I disarmed you and all of your concerns or your worries, your doubts. Oh, this is all hindsight stuff. I don't know. This just doesn't work for me unless I see him taking trades. And some of you are saying, okay, this is great. Now do it on a live account. So I'm always going to have to jump through hoops with some people. No, in here, you're going to jump through the hoops I place in front of you. That's how it works. Okay. So I think that's going to be it for the first one for February. Like I said, it'll be very, very brief. Going forward, it'll be just the euro. It'll be just the cable market. I will not be including dollar. Okay. That part is your homework. You need to be looking for the opposite of everything I show you in the euro and cable charts, or whatever market, because I might not be doing cable. It might be something else. But either or, it'll be just me showing you the blank chart, saying, okay, pause the video if you're not ready, and then I show the annotations on. I go through it rather briefly, and I'm quite confident I can do 2.5 minutes each and around about 5 minutes plus the disclaimer time in the video. So about 6 to 7 minutes total should be the time period for each one of these videos. I know I'm long-winded today, but it's the first one. It had a little bit of a trade with it. So I used the things that I drew your attention to on Sunday, because I know some of you probably didn't even take any notes, and now you can go back and say, oh yeah, he really did say that. See? That's why it's important you listen and you write down. I'm telling you what things I'm looking for. Show me how to trade, Michael. Show me how to pick the entries. Okay, start by doing this. Because if you can't do this, you can't learn my entries. And if you can't learn my entries, you can't get my trades. You won't be able to trade like me. You won't be trading IPTA. You won't be trading smart money. You will not have an institutional mindset. You will not be in line with the central bank. Not beat the market maker. Not beat the dealer. They're like middlemen. I'm talking about getting in line with the central bank. When you see me operate in these charts, and when I'm teaching you how to do it yourself, and you start seeing it in your own charts, everything else becomes ridiculous. It absolutely becomes ridiculous. It's comedy. And that sounds arrogant. I know it sounds arrogant. But trust me, when that moment happens for you, it's going to be like, wow. Everything is stupid if you're not thinking like this. Now, you hear me saying that you need to think like ICT or you're stupid. No. You need to think like the algorithm is going to price from the central bank. You're getting an alignment with that. There is no market maker that opens a spread up on MT4. Okay? That's nonsense. That is absolute nonsense. And there's courses being pushed around that teach that as that's market making. That's not market making. Okay? That's your broker opening up the spread. The broker is not the market maker. The broker has a feed, a price feed that they have to operate in. A dealer at a Goldman Sachs desk, they may be an in-house market maker for their in-house liquidity, but they are not making the market for euro or oil or gold or whatever it is that they're running the desk on. That is not making a market. We're talking about currencies here. That starts right at the central bank. That price feed is piped from them down. I'm going all over the heads of all these other people and going right to the source. What's the central bank going to do? How can you know? That's what you're learning here, folks. That's what you're learning. And if it was fake, if it was all made up, if it was lies, if it was fraud, I would not be able to do it. And I would not be able to frame it on the things I'm teaching you. The things that aren't in books. The things that no one else is teaching unless they learn from me, and they're pirating it and renaming it, and they still can't trade it. That's why I tell you, if you run into people say they can trade like me, tell them to prove it. And tell them to step in an environment outside of MT4, because they're always going to show you these fake entries. You can't fake what I'm showing you here in TradingView. And if it ever comes, if it ever comes to the point where someone can trick or game TradingView, then I will absolutely go to a live account, and I'll only do a live account trade examples then, because then there's nothing they can say anymore. So I'm willing to do all those things, but it's not necessary because you're in here learning. Okay. So don't be thinking that you can't trade with your MT4 platform through your broker. You absolutely can. But I think educators should be held to a higher standard. And if they can't execute with TradingView or something of equivalent that's non-MT4, because as soon as that became available in common knowledge that everyone can see how it could be used as fraud, I was the first guru to step away from it. It's okay. I'm going to go to trading platform on TradingView, and I'll do my executions there, and I'll record it and the whole thing. So that's it, folks. I'm trying to do as much as I can and still be compliant legally. And as much as I want to help all of you, I still have a family and a life that I want to protect. I don't want to, do something that would get me in trouble because someone isn't responsible with their own money. So that's why we do everything demo here. You sign an agreement, everything's demo. All right. If you take trades and you lost money and you felt that you want to open up a lawsuit against me because you lost money, the first thing I'm going to show them is, here's your payment history to me. Here's the agreement that you signed, understanding that everything I'm teaching you is through the medium of a demo account, and you can't profit with that. It's over. It's missed. It's done. So there's a lot of responsibility here on your part. But I'm also pouring myself into you. Like, I really want you to learn this. I really want you to learn it. And I want you to do well. And I don't want you to have any confusion. I don't want you to have any kind of regrets. But I don't want you to be confused either, because it's going to take a lot of work and a lot of time. But I promise, if you do these things, you're going to get it. It's going to happen for you. I promise you it will happen. But if you quit, it absolutely will not. That goes without saying. And it's going to be easy for you to feel like you want to quit sometimes. It's going to feel like that. Even in the best of the months when I'm giving really cool lessons, it's just going to feel like, man, I need something else. And you just got to go into your study journal and see where you had these highs, where you were feeling good, and read those, and it'll take you back to that moment. And the last thing I want to say, I'm getting questions for how should you be taking notes, because there's a lot of content. Well, I told you that in the very first spreadsheet teaching for the mentorship group that's just started now. And I also made that same video available to the previous groups, so that way they can go through the mentorship the same way, just like I'm doing here with the first group, or not the first group, but the group right now. So the first group in 2016 can do the very same thing that the new group is doing right now. You're the final group. There ain't going to be another one. We're done. So this is the only reason why I'm doing it like this, because at the end of this year, I'm not doing this part anymore. You'll know how to do it. You'll have a whole year behind you, and I don't have to do it anymore. Every lesson that you should arrive at and learn from doing it, by the end of this year, everybody that does it will have learned what it is that you're supposed to be learning from it, probably way before that. But I'm committing the rest of the year to doing this. It's a lot of work, folks. It's a lot of time, and it takes a lot of time to do these videos and edit them. And when I say edit them, I'm editing so that way you can watch it in a format that doesn't have me sneezing and coughing and the doors knocking in the background, and any other thing that would occur, dropping the microphone. All those types of things that I have to make sure I go through each one and make sure it's at least pleasant for you. And maybe this video here isn't pleasant. I mean, I'm talking too much, but I want to make sure that you have the proper mindset. I don't want you thinking one thing or a group of things and they weren't promised to you, but you're seeing things that you never saw in my YouTube channel. I'm teaching you at a level in a capacity that I will never teach on my YouTube channel. I want to get through the content I have outlined for delivery for this year, and then relax as a mentor. Not stop, but I just want to relax, because the pace I'm doing is way too much. I'm getting ready to turn 50 here soon. Not yet, but soon. I'll be 49 in August. And I just want to make my 50s a lot more enjoyable and not have this type of work on top of my shoulders and worrying about it. But I still want to be part of the community and keep our forum active. And the very last statement, and I'm closing this video. I want you, as you go through each of your month's content, like right now, month 1, through the month of February, you should be downloading and storing these files on a flash drive. Do not store them on online media or anything like that. But store them on a flash drive and then make a copy of that flash drive and put it in a safe place. The reason why I'm telling you to do this is because at the end of my purchase of this server, okay, I'm paying a lot of money to do this, and I'm not going to continuously pay the amount of money I'm paying to run this service when I'm done doing all the teachings. You have lifetime access to me when you're a charter member. You don't have to have lifetime access to streaming the videos. I want you to download them. That way you have an archive that you can have. It's yours, okay? That doesn't mean you can put them on for sale. Doesn't mean put them up on your YouTube channel. Doesn't mean put them on a website that people can buy. It's not what I'm saying here. What I'm saying is I'm not going to forever host these videos on my server. So that's why I'm telling you to download them. Now, you don't want to have the job of downloading 1,800 videos or whatever. I don't even know what the number is now or what it will be, because we're doing now a daily video. Plus, there's going to be charter member video, and it's a lot of videos. So you want to be downloading them, because there will be a time, I think, if I'm not mistaken, not next August, but the following August, or maybe it's July. It might be 2023. Yeah, I think it's 2023, if I'm not mistaken. But don't hold me to that date because I'm trying to think about it off the top of my head. But one of those Augusts, either in 2022 or 2023, I would have to purchase the same level of server that I have now. And I'm not going to do that. It's extremely expensive. I have so many of you in here, and it's a lot. And I'm not going to lose money paying for something that you guys don't necessarily need, which is having all these videos on a server. So you want to be making sure that you're downloading them as you get them and saving them. Okay. Now, it doesn't mean if something happens in the future and you lose access that I can't make a zip file and make it available to you. I'm just not hosting something that has this much cost behind it because it's very, very expensive for me to run this mentorship. And I think that's going to be it, folks. I will touch base with you, obviously, by way of my community tab, if there's anything for me to talk about. And tomorrow there will be a very, very short video, as I outlined, that we would do. And we'll continue this on a day-by-day basis. Until then, be safe.